the best options to pay back a CEBA business loan, and how to save $20,000.
Own your life.
In this episode, we will cover which strategies will help save you the most amount of money when repaying your CEBA loan. You may or may not like what you're about to hear. I'm Jessi Johnson, guiding you with almost 18 years experience as a realtor and mortgage broker. Stay with me for the next few minutes as I reveal the most effective strategies to pay back your CEBA loan and how you can save $20,000. First off, this is very important to understand if you took the COVID CEBA government business loan. As of today's recording, the repayment deadline for eligible CEBA loan holders to qualify for a full or partial loan forgiveness was just barely extended to January 18th, 2024. CEBA loan holders that submitted a refinancing loan application specifically to the financial institution that provided their CEBA loan by January 18th, 2024, but require a grace period in order to finalize the payout of their CEBA loan can still qualify for partial loan forgiveness, emphasis on partial. If the outstanding balance of the CEBA loan, other than the amount of potential debt forgiveness plus any applicable interest, is repaid by March 28th, 2024. CEBA, aka the Canada Emergency Business Account, has been a lifeline for many. However, repaying it can be daunting. Are you a business owner concerned or potentially struggling to repay your CEBA loan? Well, you are not alone. About 900,000 businesses in Canada took COVID CEBA loans. That equates to about $50 billion, and most of that is still outstanding. Get this, only 10% of businesses have paid back the CEBA loan so far. So if you fall into that category, well done. 89% of small businesses in Canada took out the COVID emergency loans during the pandemic, according to the Financial Post. I'll admit, I'm one of those people. I borrowed 40 grand and have the money saved to pay it back, but it's in stocks and in investments. My portfolio isn't exactly doing so hot right now, so I'm hesitant to use that. So, probably like you, I'm looking at all options to compare what is best. Let's cut to the chase. Here is how you can save $20,000. If you took out $60,000 in a CEBA loan, it all 100% must be paid back by the deadline, and then you will be given forgiveness on $20,000. You will only have to pay back 40 grand. If you took out $40,000 in a CEBA loan, you must pay back the entire amount, and then you get the forgiveness. Essentially, you have to pay back $30,000 by the deadline, and then they forgive the remaining $10,000. I still don't get the math on that. They are literally encouraging you to borrow more money. Now, let's review a series of strategies and options to pay it back. Then I will review how it works and what to expect if you don't. The following strategies are in order based on cost effectivity, but first, a quick disclaimer, I'm not a financial advisor or an accountant, so I highly recommend you speak with professional guidance first before implementing any of these strategies for your situation. Strategy number 1, sell stocks or investments. Strategy number 2, refinance your existing mortgage. Strategy number 3, a secured line of credit. Strategy number 4, a BDC loan, unsecured line of credit, or bank business loan. Strategy number 5, secured private mortgage equity loan. Strategy number 6, unsecured third-party loan. And last but not least, strategy number 7, file for bankruptcy and tell the government to go themselves. I don't actually recommend that one. Now, let's look at some numbers to understand these strategies better. But while I have your attention, if you appreciate my hard work, please hit the like button and subscribe to this channel. Breaking down strategy number 1, sell stocks or investments. If your stocks are underperforming like mine, this could be a great option for you. You need to look at the tax implications of selling your investments versus tax benefits of writing off the interest of another loan. Talk to your accountant about this. If your stocks are earning only 5%, but you're going to have to pay 10% with a business loan, then selling your poorly performing stocks sounds pretty good. Again, I'm not a stockbroker or a financial advisor, so speak with your team before first implementing any type of thing like this. Strategy number 2, refinance your existing mortgage. Many lenders allow you to keep your existing mortgage and then top up, which is called an equity takeout. The new funds will be at the current mortgage rates, and in this circumstance, you can keep your existing mortgage. A lot of people still have 1.5 to 2% mortgages. You don't want to lose that. So this strategy is going to be around 5 to 6% range based on the time of this recording. No fees should be associated with this except for a lawyer or notary because you would likely be changing the title registration. Strategy number 3, secured line of credit. Not all lenders offer line of credits, but if they do, this could be a great option for you. Right now, a line of credit will cost you prime plus 0.05. So at the time of this recording, it would be 6.7%. Fees for this should be very low, especially if you already have an existing collateral mortgage. Speak with your mortgage provider or me, and we can tell you and help you figure out if you have a collateral mortgage, which makes things a little easier in this circumstance. Not sure what that means? Just ask me in the comments below. This is an interest-free loan, and you can pay back the principal portion when it is best for you. Strategy number 4, unsecured line of credit, BDC or bank business loan. The BDC, Business Development Bank of Canada, offers up to $100,000 with rates at about mid-8 to mid-9% range. If you have an existing loan with them already, and many of us do, it's pretty easy to re-advance what you've already paid back. Alternatively, speak with your bank or credit union about an unsecured line of credit or business loan. Unsecured loans are substantially more expensive for obvious reasons. All loans are based on risk, and unsecured loans means higher risk. Not sure what secured or unsecured means? Ask in the comments. This strategy will still cost you around 10%, but at least there'll be no fees associated with it. Strategy number 5, secured private mortgage equity loan. This is a first or second mortgage secured on the property through a private lender. Private lenders are great for those with low credit or who don't claim enough income on their taxes. Private lenders care more about the property and less about the applicant. That's why it's defined or called a equity loan. The rates can vary. They're higher now, like everything else, but the rates start at around 7%. And they go up to about 12%. Yes, you can get much higher private mortgages, but not through me. There will be fees associated with this transaction as well. There'll be a broker fee and there'll be a lender fee as well. Most private mortgages are interest only, which is great. I recommend dealing with Home Equity Solutions, and the website is homeequitysolutions.ca. Because private mortgages are based on the equity of your property, you can often obtain a lot more capital than you would if you were to get an unsecured line of credit or business loan. If you have any other outstanding loans with interest rates that are higher than a private mortgage rate, which is very common, credit cards are a fantastic example, outstanding taxes, whatnot. This is the perfect time for debt consolidation and maybe even paying off some outstanding taxes. Now, it takes about 3 weeks to have your funds in your bank account, so plan accordingly. Strategy 6, unsecured third-party loan. Now, this is where things start to become very pricey. I've collected a long list of companies that offer third-party unsecured loans, so please reach out to me if this is a direction you need to take. The interest rates start at 13% and go up to 26%, but that's not all. You're looking at an additional upwards of 6% fees in addition to that. Yes, I said that right. It could cost you 32%. Ouch. The crazy thing is it can still be cheaper going this route than losing the $20,000 forgiveness. Only take this route if you have the capacity to repay the entire loan within the first year. Otherwise, the high interest will work against you. Strategy 7, file for bankruptcy. I was just kidding about that. This is your absolute last resort, and I do not recommend it. I have personally been able to save countless people over my time, during my time, through private mortgages, and I've been able to save them from bankruptcy. So just call me. There's usually a way around that if you're really stuck. There's almost always a way to avoid bankruptcy. Almost. Now, let's review how this plays out if you exercise none of the above strategies forego the forgiveness and simply repay the full amount after the deadline. You have 2 full years to repay the entire loan, which expires December 31st, 2026. During the period of January 19th, 2024 to December 31st, 2026, interest will be charged at a rate of 5% per annum. This will be applied to the outstanding balance of your CEBA loan. $60,000 divided by 24 months is $2,500. You now must pay $2,500 per month plus interest that is applicable. So your monthly payment should be approximately $2,750 day one. How many businesses can afford a new payment that high during the worst inflation in 40 years? I'm going to guess that many businesses are going to struggle with this. The Financial Post reports that 250,000 Canadian businesses could close if the loan repayment deadline is not extended for a second time. Let's hope they're wrong. Your goal should be to repay the loan to obtain the forgiveness option. And just a heads up, if you don't know already, they're planning on taxing you for that forgiveness as well, which of course complicates the overall savings calculations. In real estate and business finance, staying informed and being proactive is key. For more insights and strategies, don't forget to like, share, and subscribe. Once again, I'm Jessi Johnson, guiding you with over 17 years of experience. Don't forget to grab a copy of my best-selling book, Rockstar Real Estate and Investing, for more in-depth knowledge. The link to purchase the book on Amazon is posted in the description. And if you enjoyed this video, you'll probably like this one too. I'm Jessi Johnson, signing off. Remember to own your life. Bye-bye. If you took the COVID CEBA, first off, this is very hard. No, that's not it. That's wrong. And this teleprompter sucks. That's a mouthful. If you are a business owner concerned or potential... 89% of small businesses in Canada took out the COVID.